Hi, everyone. Welcome back to the Growth Playbook with myself, Kim Clark, and my dad, Alan Bolio. As mentioned in last week's episode, today we are going to be talking about Japan's economy and how we should be thinking of it here in the United States. So, looking forward to this topic. Admittedly, I know nothing on this subject, so I am looking forward to all the information that you're going to share today, Dad, and seeing how that can apply to better helping my clients in our conversations, and then how that can help our audience who tunes into our podcast here. So excited to unpack it all with you.
Thank you. I appreciate that. Let's begin with the overarching theme. This isn't so much about managing your business today. This is about watching the whole environment that we all work in and our personal finances.
Mhm.
And so what happened in Japan is not just about, oh, how can I sell more, which is always important, but it's about, is that the beginning of an earthquake? And is my house about to fall down? And am I ready for
Mm.
it? Okay, ready to
Yeah,
go?
I'm
Oh,
ready to go. Let's share your thoughts.
I'm not going to put you on the spot, but I'm just going to ask our listeners to answer this question. You don't have to do it if you don't want to.
Okay.
When you look at the world's economies, where does Japan place on the size scale, GDP?
Oh,
Where you don't have to answer.
I
I'm
have
not
no
trying to
idea.
put you. I think that's the answer most people would have, and which is, but they're number four.
I was gonna say five.
You should have. You should have. That's where they're going to be next. For years and years and years, they were number three. U.S., China, and Japan. Now Japan has moved down to fourth, and Germany's moved up to number three. Most people, I think, would be surprised that Japan is that powerful of an economy because they're relatively quiet. You don't hear a lot. A lot of Japanese machines and robots and stuff come to the U.S. and a lot of business and cars, obviously, and different things. But it's not like they're always on the global stage making a lot of noise, other than when they're ducking a North Korean missile. I mean, it's they're pretty quiet. They had a recent shakeup though, which I think is worth noting, and then talking about the implications. Their bond market got significantly rattled the other day, and that had a rattling effect on the U.S. market, and it just caused everybody for the day to go, ah! and that really got my attention. What happened was their bond market, not just theirs, a bond market is a source of funding for when government spending is not covered by revenue. So when you have budget deficits, you always have to have selling of bonds. And the United States, of course, is a major nation in terms of budget deficits and the size of our debt. Japan's is worse than ours. Now, not a little economy, number four, so it's a big deal. And their population is in decline, which is an important factor. Our population is not in decline, but theirs is, and is past the point of no return. There's no way they can come back from it. So one day, they were selling 20-year bonds, and not much was happening, and it was kind of a ho hum. People weren't really interested. But the prime minister, I'm going to try to say the name correctly, Tachayaki, uh, said that they plan to cut taxes and boost spending. Now, when you plan to cut taxes, that says we're not going to drive as much revenue from ourselves. We're going to increase spending, so we're going to be going to the bond market more. And the bond market said, in response, that's a terrible idea. You're expecting us to pay for you as you go forward, and we're not all that certain about your future. And their bond yields went to a record high, and the stock market went down, and businesses were rattled because of the uncertainty caused by a debtor nation saying, we're just going to trust the world to finance us with this great plan of ours that'll help our economy. Have you ever heard anybody say that around here? We're going to cut taxes and we're going to boost government spending and it'll all be fine. So there's a parallel there, right?
Hmm.
And what happened is that in my mind, what happened is I thought to myself, well, if the bond market didn't come back and say, all right, we'll buy your bonds, and some people did, and they're going to have a hard time for a while. Their only recourse would be to raise money another way. And the way to raise money another way is to sell U.S. bonds. They're the largest foreign holder of U.S. Treasuries is Japan.
Mm.
China's number two. So if you need cash because you got to keep things going in your social services because you have this huge senior population you're taking care of and not enough taxpayers and all the rest of that, you got to raise cash. You sell something and you don't going to sell an island. You're going to sell U.S. Treasuries. Uh, and as you sell U.S. Treasuries, if you do it slowly, it's not a big deal, but it's like a leak. And as the more dollars come into the world market, if it's done slowly, it can be pretty much ignored. But if it's done quickly, all of a sudden it weakens the value of the dollar because there's more dollars out there. And if they're selling treasuries at a nice rate of return versus what the US is selling them for, people are going to go buy them from Japan. And all of a sudden we can't sell treasuries, so we're not getting the cash we need to keep our economy going. No bueno, right? This is not a good
No,
thing.
this is all bad.
This is all bad.
I see where you're headed with this, and I don't like it.
Yeah, it's now Brian and I used to talk about this, and this is in our book that this is the type of thing that can happen. And when I was on stage, I would certainly talk about it that this was a weapon we handed over to China because they're the second largest foreign holder. This was the weapon. Now, what caught my attention was that Europe, Deutsche Bank, somebody at Deutsche Bank said recently, the Achilles heel to the didn't say Achilles heel, but a I can't remember the exact wording. The Achilles heel to the United States is their debt.
Mhm. Yeah, you shared that article with me. I was like, have they been listening to you? They know now.
You know, that's right. So that's why the Japan thing matters because it's a lesson to us before it gets out of hand that we
Mm,
have to do something about it. And if we don't, we risk becoming Japan. Now, it doesn't start with the United States. The day that happened in Japan, our bonds were rattled, our stocks went down significantly, and the dollar weakened.
mm,
People aren't going, oh, that's just Japan. They go, no, that's the world market. And it was a great big pause. And when the dollar weakens, a lot of people know this, some don't. If you have the dollar continuing to weaken, it's inflationary. So if it's inflationary, that means the Fed has to raise interest rates. So as we go through the next few years, if the dollar begins to lose ground internationally, then we have to see the Fed raise interest rates. Now, other people argue there are ways to keep the dollar strong. Others will argue we should inflate our way out of it, which really weakens the dollar. So, I mean, there's different points of view. But it's something for people to keep their eye on, or maybe listen to us rather than having to track it because that's boring. And we'll call it out when it needs to be called out. But it's a major tell. And the warning shot across their bow should have been enough to get our attention. Do you think it got anybody's attention in Washington?
I would hope so, but your question and facial expression is indicating otherwise.
Right. So because of that, and because of the underlying premises for the depression, we're still on track. And we're not paying attention to the tremor that's suggesting that San Francisco may be suffering a major earthquake.
Mm.
That's nothing. Just
This is how that movie San Andreas started.
that's right. So it's a pretty good movie. Yeah, and I was in San Francisco once when there was an earthquake, which I mean in California, which was kind of a unique experience for a northerner. But the point is, it's serious when it happens, and when it happens, and if we don't pay attention to it, it just makes it that much worse as opposed to trying to slow things down and get a handle on things. Modern monetary theory is what Washington operates under. Democrats and Republicans use modern monetary theory. MMT is what it's called. I like to call it, and I'm not the one who coined it, magic money tree.
Mm.
It's like there's no end of supply to money. The thought process is the world will always invest in us because we're the world's strongest economy. What happens if we're not? And what happens if we tick off the world? Now, with that thought in mind, and this isn't going to happen, but Europe brought out their ACI, which is anti-coercion instrument. Okay, they haven't never used it, but they brought out, think of it as a trade bazooka. They brought out this great big bazooka aimed at right as, and this had to do with Greenland. And since then, everybody's calmed down. But when the president was talking about perhaps armed forces and all this, the Europeans brought out their trade bazooka, aimed at us, and said, try it.
Hmm.
And one of the things that the ACI does, it says, we will encourage all private sector to no longer buy U.S. Treasuries, and we, the EU, will no longer buy U.S. Treasuries. And guess who holds 40% of all foreign-owned U.S. Treasuries? The EU.
So I'm guessing the EU.
Yeah. It's not only if they stop buying them does it hurt, what if they decide to start leaking them? If we tick them off, it's a step-by-step process. It's a long process. It doesn't happen in a day, and they can do it in a measured retaliation. It's not all or nothing. They can also say, you know what, foreign U.S. companies are no longer allowed to bid on European projects. U.S. companies, there's a suspension of intellectual property rights. That's all
Hmm.
covered under the ACI. They have ways of firing shots. And as a matter of fact, they were looking at specific Republican states to fire the shots at,
Hmm.
to send a very specific message. So what we need to remember, I guess, through all of this probably too long a soliloquy, what Japan reminded me of, we are not invulnerable. There are weapons out there. China has it, and Europe now has developed the ACI, which could have a devastating impact on our ability to fund our way of life through excess government spending. And something that all of our listeners need to be paying attention to so that they are financially ready for what is coming in the 2030s. All of this is a precursor to the 2030s, which is brought about by massive government debt and brought about by demographics, among two of the reasons. So this is just a warning podcast. The tools are there to cause damage, and we see no signs of rational budget thinking in the United States, and the rest of the world has other options besides the United States. Now, one other fact I want to throw out, and then I'm going to be quiet, which is hard to believe, I know. I just saw, this is from Statistica. I just saw that in Europe, the favorability rating of the United States dropped for all of the EU by 19 points, by the most in Denmark, but also in Germany and other nations. And China's favorability rating went up.
Hmm. Has that been precedent? Is there a precedence for that in the past?
Not that I'm aware of. But Europe is thinking if I don't have a strong ally in the United States for trade and all the rest of that, because they could block trade from the United States and deny the United States 500 million consumers, and they would need somebody else. So they're like, if we don't have you, we'll go to here because we need somebody. And uh, they're just so unhappy at the moment. Now that's all been backed off, okay? In Davos, things have calmed down, and that doesn't mean it can't flare up again, and doesn't mean it doesn't serve as a warning. We cannot act as if the world has no recourse. We cannot act as if there is no impunity to our actions. At the business level, we have to make sure that we have our bunkers built. We have enough cash. We have a plan. And as individuals, we have to make sure that we have a plan so that when we see this company, we can go to Clark, Bellin, and Bellwether and go, now. And he'll know because he's obviously in constant contact with us that it's time to spring into action. And purpose of the podcast, to let you know how it can work. Number two, we've seen a fire drill. We've seen a test. And what I saw was pretty disturbing. So I wanted to make sure that we could tell everybody about it in case they just passed it over in the news.
I'm glad that you did. And I like how you use the word test because this is something that we've been talking about this past year at varying points on this show as potentials, possibilities, so on and so forth. But I think to your point, this is our first real test case of some evidence of what we've been saying. So there's proof now to the concept that it is possible. So I'm glad that you brought it around as okay, we've been talking about it, and here's our first test case.
Yes, and hopefully it'll keep us being businesses, leaders, those that are part of our group here, thinking about the immediate problems, like last week's labor, and the future problems. Boy, can you imagine having all that on your plate at the same time? But that's where we are, right?
We certainly are, and I can imagine it because I'm helping my clients with it every day.
Well, and actually, I do too on board level. At the board level, the boards I'm on and the people I work with, it's the same thing. And that's hard to get the attention to be focused near and far at the same time. It's like you with your glasses, you got to look down, you got to look up, and you're out of focus.
It's true. It's true. And I actually, when when talking with folks, and I say, all right, we've been putting out fires the last two calls. So for the next two calls that we're going to have, we're not talking about fires. We're looking at long-term strategy. Like we have to plan further ahead. So I see that as part of my job of reining it back in because it is easier just to focus on the near term and put out fires. And so I point that out to people and say, okay, we've dedicated too much time to this short term. Let the fire burn for the next 2 weeks so that way we can work on the business instead of in the business. And it's hard to do, but it's important to do, and it's worthwhile in the end.
Absolutely, 100% agreement. And I think you're instituting board thinking when you do that, because that's the function of the board, right? Yes, it's a fire below deck. That's what you get paid to take care of. Let's talk about where the ship is going.
Yeah.
And
Yeah. I love that analogy. Instead of being below deck, putting out the fire and hitting the iceberg.
right, exactly, exactly, exactly. So, all right. Well, I, I enjoy sharing the information. I hope it proved valuable and got some folks thinking about things that we can't be complacent. We have to be observant and pay attention to the signals, the tests, and the smoke over the horizon.
I'm glad that you brought it as a topic, and I'm sure people appreciate it too. So, as always, feel free to comment, reach out to us on the side. We have our emails and website in the description in YouTube. So, Dad, anything else that you want to add before we close out for today?
No,
All right. Well, thank you for bringing this to our attention and for making me aware. I'll thank you, be the first one to thank you for making me aware. And as Dad mentioned in today's show, we will continue to make you aware as any other tests are appear and any other activity that you need to know about. So stay tuned for future episodes and thanks for joining us. Bye, Dad.
okay. Take care, Kim.